Welcome back. You're watching us here on Bazaar Morning Call. Let's talk about Happiest Mind Technologies. The stock has completed, the company has completed 4 years on the bourses, has seen a strong run since listing as well. And they've also set themselves a target to reach $1 billion in revenue by 2031. So to discuss more on the company's growth outlook, we're now joined by Joseph Anantharaju, who's the Executive VC and CEO, Product Engineering Services. We also have Venkatraman Narayanan, who is the MD and CFO of the company. Thank you so much, gentlemen, for joining in. While we talk about, the long-term prospects, a great run that you guys have had, and more importantly, the outlook for the company in the near and medium term, just as of today, there is a wave of weakness in all the IT stocks, and that's led by some sort of concerns around Accenture saying that they have put on hold promotions for the next 6 months. Are there any demand-related concerns? What are what are the feelers that you're getting when it comes to demand currently?
So, I think at the beginning of the year, we gave our guidance for this year, and we feel quite comfortable with the guidance that we've given and that we'd be able to meet that for the current year. I think the two acquisitions that we made, they've got off to a good start in terms of being able to cross-leverage capabilities both ways, from a domain and from talent and staffing perspective. Having said that, I think we need to keep a close watch on the market because there are a few factors. You have the election coming up. You have some of the geopolitical developments that continue to linger on. So we need to continue keeping a close watch. But we feel comfortable with the guidance that we've given and the kind of traction that we're getting with our customers for our offerings.
Joseph, hi. Great to have you on, and congratulations on the milestone. So just to go back to the mood, when we spoke to you, I think earlier, just after the first quarter performance, you did indicate that things were looking good. In fact, I think consolidated revenue growth was as high as 10%, your acquisitions plus the organic put together. So is it still looking as robust? We're just alluding to this recent news development on Accenture pushing back its wage hikes by 6 months. Headlines like that make everybody sit up and take notice and wonder what's going on. Your thoughts?
So, and if you look at a company like Happiest Minds, being one of the advantages of being relatively smaller is that the incremental revenues that we need to get is not high as some of the large companies. So that's an advantage that we have. We've gone ahead with our wage increase for most of our people. We break it up into 2 cycles. We have the junior mid-level that we do in July, and we've completed that. And we'll be doing the next one in October. And we had a discussion internally, and we felt that given the revenue and growth outlook, that we could go ahead with our wage increments for this year, keeping in mind the kind of market condition and other things. So that's what we've been able to do.
And just to sort of understand that, wage hikes, just in terms of quantum, have they come down? Because anyway, now you're not dealing with as high as attrition rates. And overall, that whole massive attrition issue that the IT sector was grappling with, that's a thing of the past, right? So what could the potential wage impact be? Because I think in an earlier call as well, you'd called out to the possibility of maybe a slightly more softer second quarter because of lower working days, and part of your wage hike is also happening in Q2?
Yeah, that's what we had said. We had alluded to a drop in margins because we would be taking the full impact of the wage hike for Q2. For the substantial part of the people, the wage hike is effective July 1st. So that will impact Q2 to a certain extent. And as you rightly pointed out, the lower number of working days. So that's baked into our overall forecast of margins. We have been giving you a number of 20 to 22%. Q1 was close to 24%. So we are trying to address that. We have also called this point out that we have been standing apart from the markets or the other companies who have been pushing out wage increases, who have been giving much lower numbers than what typically one has seen in the past. So we have, and maybe even addressing or adjusting variable pay to make up for the profitability. Thankfully, we have not resorted to any of that. We have gone ahead with our wage increase, which is I would say high single digit on an average across the company. We have gone ahead and paid our variable pay as per commitments, and also we have not pushed out any wage increase cycle. So that said, we as we said at the beginning of the year, we are looking for one of the best years since our listing. Like you rightly covered, it's fourth anniversary of our listing. Just to put things in perspective, when we listed the year FY21, we were at about 797 crores of top line. Since then, we have grown 115%. In FY24, we closed the year with 1,710. That's a massive growth of 115 years in 3 full financial years. EBITDA has grown from 215 crores in the year of listing to 421 crores, which is a 96% growth. People numbers, we were 3,200. Today, we are close to 6,200. $1 million customers from 26 to 58, 123% increase. Shareholder numbers, when we closed our IPO, it's a very big IPO. We had 2 lakh shareholders. Today, we have got 7.5 lakh shareholders. So on all metrics, we are doing well. And we are looking to a
you're doing well on all these metrics. We take that point. While your revenue has doubled from the time you first listed, the share price has moved 5 times. So obviously, what the street expects for the future is a lot more than what you've delivered in the past. But Prashant, you had something.
Some fantastic numbers there. Congratulations to both of you and the teams at Happiest Minds. From me as well. Good morning, Prashant here. Mr. Joseph, if I can come to you. You said, right, you're a smaller company, but big ambitions. That $1 billion revenue target, which we've sort of talked about in the past as well, over a period of time. Now, my question is, we are at the cusp of interest rates in the US starting to come off. Some of your larger peers, when we speak to people in the IT services sector, we've heard this higher rates in the US impacting demand, especially discretionary demand, to which you are exposed to in a meaningful way. Could you tell us if rates start to come off, could we see meaningful acceleration on the discretionary side of your business?
Sure. So, I've sort of clarified this earlier as well, Prashant. The work that we do with many of our customers, they don't look at it as discretionary because you're working on the platforms that they are using to either interact with their customers, in some cases drive e-commerce, or in a few cases to manage their internal employees. But in most cases, the work that we're doing is more platform that's customer facing. And these are, once the customer has to make investments to first build these platforms, and then you need to keep adding features and functionalities. So we work with our customers as an extended team, and in most of the cases, and therefore the budgets kind of roll over from year to year. There could be a small variation. From that angle, it's not really discretionary. I just wanted to make that point. And in terms of the outlook, I think once we do have the interest rates dropping, and hopefully we'll get to hear in the next day or two, and we have a couple more hopefully this year, I think that will add to the positive sentiment and ease up whatever constraints that customers had. So we should see an improvement in customer outlook, and I'm really keenly watching out for how customers play out their budget in the November-December timeframes.
Okay, just one last question. Last time we spoke, you talked about a Gen AI business unit you'd set up, and you said that, well, you're starting to get work, but a smaller size, right? $100,000, $150,000. How is that scaled up? How many people are there in that unit now? And could you give us some projections there? Sure.
So when we last spoke, Prashant, we had said that we had around 50 discussions around a month and a half back, and I can say that in the last month and a half, we've added another 10 discussions that we've had with customers. So you can see, that the momentum building up. And in terms of the number of people, we have around 125 to 130 people that are part of this team. But equally important, that's the core GBS team, right? That have capability on GenAI, on Llama, on various LLMs. But we also made sure that 85 to 90% of the rest of the Happiest Minds is also trained on GenAI, and we plan to cover the whole company by, let's say, latest Q3. So that way we would have flexibility in terms of staffing our projects. What we are seeing is that there's a lot of interest and excitement still in the customer base and among some of our prospects on how they can leverage this technology. And I think this is one of the areas that we are looking at to really help us get to our $1 billion goal.
Sure, absolutely. I think this word, Gen AI, this is here to stay. It's not going away from conversations anytime soon. And we look forward to hearing more about it as your plans scale up as well. Thank you very much, gentlemen, for being with us. Congratulations once again on your 4-year listed journey and completing that milestone.